Alright guys, so now we know what a phase line break is. So in this video, we're going to be focusing on the entry and the execution of the phase line break, the stop loss and the targets as well. Okay, so this is the final lesson of the strategies. After this, you're going to know exactly how to find and how to execute the 5 strategies. So we have the 2 basics, the IBO and the CBO. Those are two basic strategies. So I recommend everybody start with those. Master them, get confident with them, find consistency with those 2 strategies before moving into the advanced ones, right? Then we have the advanced strategies. We have the advanced breakout, we have the advanced continuation breakout, and we have the phase line break, the strategy that we're talking about right now, okay? So with that said, I'm not gonna spend too much time again on the intro. We already explained what the phase line break is. So let's jump right back to the charts. Let me show you how to execute this specific strategy, where to place your stop, where to place your target and such. And then in the coming up lessons, we're going to be talking more about management. Okay. So with that said, guys, let's jump into the charts and let's wrap up the strategies. See you guys there. All right, guys. So in this lesson, we're going to be digging again into the previous examples from the previous lesson, part 1 of this strategy 5, and we'll be focusing more on the entry, the stop loss, and the target. Okay, so this $1 example we looked at in the previous lesson, and let's just give you a quick refresher. You should already know pretty much what the phase line break is, have a general understanding, but for now let's kind of focus more on those entries. Okay, so quick overview. This phase line break happened after this daily 50 EMA rejection. So like I mentioned in the previous lesson, it's nice. It doesn't matter whether it's a continuation of a run or a reversal of a run. I like executing phase lines typically when it's a reversal, when the momentum, when the news announcement gives me a reversal in the market, like a trend change or a start of a new run or a start of a new pullback. In this case, it's kind of broke down, had a small pullback, and then boom, okay? Rather than going up and continuing with this bullish movement, okay? So I like it when it gives me that reversal. So in this case, it was bouncing with that daily 50 EMA, and that's when the trade short happened. On the intraday charts, this is an example when I was waiting for kind of a CBO on a break and retest of the 1 hour 50 EMA, and I was not able to catch it because of this news announcement. It caused a massive, I was waiting for a 5-minute break, but as you see here, just that 5-minute break when it happened, that was that news announcement, and it was just a massive drop to the downside. So there was no way of catching this break and retest unless you had an order set. So after that happened, that's when the phase line break entry came in. So let's focus on that a little bit, So like I said, phase line breaks, it doesn't really matter how the intraday charts look like. Typically, it's going to be at the beginning of an intraday trend, So in this case, it's kind of at the beginning of this 1 hour trend, right? So that's typically when it happens. But there's going to be other examples that is going to sometimes look a little bit different as well. So from a 1 hour point of view or from an intraday point of view, you're just mainly looking for that momentum. That's what you're focusing on. You're focusing on the momentum. So let's jump back in time. And I'm literally just going to show you how it all looked like. This is a simple strategy, but it's simple, but it's complicated at the same time. Because it's risky. It has to be utilized at the proper time. Okay, you cannot use phase line breaks all the time, because if you're utilizing phase line breaks all the time, well, then you're not going to be playing the other 5 strategies, and the other 5 strategies are just safer. So phase line breaks should only be utilized during these high volume, high momentum periods. So here we go. Okay, so I'm going to go one by one and show you exactly what happens here. So again, I was waiting for a live 5-minute entry here, but you can see, boom, news announcement happened, and all of a sudden, no live entry. So that was that news. And sometimes what's going to happen is it's going to cause a drop to the downside and right away kind of rebound, and give you this kind of weird spike. So we don't want that. We want a clear direction. So if it drops to the downside, we want it to continue to the downside. So let's see. So in this case, it continues. Small pullback, and here's the beginning of the phase line. So at this point, this is just a small pullback. I wanted to kind of pull back near that 0.382 Fibonacci, so let's just delete this for now and kind of watch how this happens. So at this point, the pullback is already beginning and it's going. Right, at this point, you can already kind of start drawing your phase line in. Connect those lows and see what happens, right? Because at this point, you can already start getting ready because it's approaching that 0.382 or that 5-minute 50. It doesn't always have to be 0.382, but I like it when it's close to that 5-minute 50. Okay, so here it never broke down, so you have to readjust your phase line if you're connecting the extreme lows, like in this case. And now it's at 0.382 properly. And you're just waiting for that squeeze. So, okay, here might be that squeeze, and here's the break. Okay, so here's the entry. Let's fast forward on the 1 hour time frame to that point in time, so you guys see how that looks like. And here it is, so boom, massive drop to the downside. And now you're going to be looking for a pullback to this horizontal level, the previous lows. So let's see how that looks like. And there it is. So the hour closed, and now we're going to have a quick pullback. And that's the 5-minute pullback right there, and pretty much at this point, it's breaking down. Okay. And on a 4-hour chart, there we go. So you see massive momentum came in, all of a sudden it kind of dropped to the downside. And this is not even big momentum. This was bigger, much bigger momentum a few days earlier, right there. I just didn't take that trade. I ended up taking this one. See, I never cut this one. That's the thing. So, with these phase line breaks, you really have to be on the charts when these high impact news announcements happen, And I'm not on the charts all the time. I have alerts placed. I don't really have alerts placed on high impact news announcements you can do that. You can stay up for every single high impact news announcement if you want, but that's a little bit too hardcore for me. I prefer the other 5 strategies, the main 3 strategies, the 2 basics, the IBO and the CBO, and then the advanced breakout. Those are kind of like the main strategies that I like to focus on. This one's a little bit more advanced, but I only utilize it, like I said, during the high volume periods in the market. So here we are, so when the 1 hour chart's pulling back, that's pretty much what the 4 hour chart looks like. It looks like it's rejecting, but is it? It's not, because the 1 hour chart is actually a break and retest, right? So sometimes this 4 hour candle can be kind of misleading because it looks like it's rejecting support, but it's not, Price action broke below it on a lower time frame and it's just a pullback to reject it, right? So don't worry on how that 4 hour candle looks sometimes, because it's literally just a retest on a lower time frame. And here it is, it's dropping back again. So when it comes to figuring out your entry, the way it's going to be, you already want to be kind of ready, when it's getting to that rejection point. And in this case, what I wanted to do is you can push these guys very far. Really, it just depends on what the higher timeframes are doing. Sometimes the higher timeframes are so great, maybe a continuation of a trend that you want to push it, just like you would with a typical strategy. Other times you want to go nice and easy, quick, so you can just target the recent kind of lows. In this case, I ended up targeting the recent lows here on the 4 hour chart, and I actually went with a 50 pip target, right? So it looks something like that, targeting the recent lows. And my stop loss, so when it comes to the stop loss, you got to understand that the stop loss might seem tight, okay, when considering the stop losses for the other strategies, specifically like IBO and CBO. Stop loss is going to be like way above that 1 hour 50 EMA, or way above that 4 hour 50 EMA. In this case, that's not possible, because if we choose to have that stop loss, well, then it's not really it's pointless to take a phase line break, because you're not going to get the reward risk. It's going to be entering too late. You want to enter down here to have a stop loss up here, not all the way down there. So with phase line breaks, you got to understand that it's a momentum play. It's a high impact momentum play. Okay. So once it breaks this phase line, it's going down. That's what you're expecting, that once it breaks the phase line, it's going down, So you can have a tighter stop loss. So I typically have a stop loss like somewhere above like around 0.5 fib, okay, on the 1 hour time frame, on that 5 minute time frame. But, mainly just kind of above that 5 minute 50 EMA, so that if it comes up to reject that 5 minute 50 EMA, I don't want to get stopped out. So I wanted to have it nicely above that 5 minute 50 EMA. So I kind of use my discretion. I don't want to put it too high, because I still want to get a decent reward risk ratio out of it. But at the same time, I don't want to choke it, because if it continues to go and hit that 5 minute 50 EMA, I don't want to get stopped out for no reason. Okay. So I like to go kind of visually, but 0.5 Fibonacci, in this case, it's a decent kind of level. So I ended up going with a 25 pip stop and a 50 pip target. Okay. And pretty much I already position sized this when I was rejecting 0.382, and I was just waiting for that phase line break. And then phase line break happened, trade was taken, and price went down from there. So that's what all you're looking for, is you're just looking for the 5 minute trend in this case. It's a 5 minute phase line. So like I said, the 5 minute phase line break will happen within a few hours after that news announcement, just like in this case. A 1 hour phase line will happen, a day after the news announcement. And I'll show you that in one of the next examples. And there it is, profit target hit, pretty simple. This is really, it's not like a difficult strategy. It's an easy strategy to learn. But like I said, don't utilize it all the time, because, the other ones are still better, because it has to be high impact. It has to give you this clear direction on high impact news or some kind of a high impact momentum play. Okay. Because otherwise the other plays, they're just going to give you a typical pullback, so you want to make sure that there's so much momentum to the downside or to the upside that it's not going to continue with a bigger pullback. It's once it breaks that phase line, it continues down, So like I said, focus on those high impact announcements and high impact periods in the market, like a potential recession and such. And there it is. It just kind of dropped on the 1 hour time frame, and same thing on the 4H. So as you guys see, it's simple. There's nothing too crazy about it. In the next examples, you're going to have more examples on how to do this position sizing. But again, it's pretty straightforward. So that's it for this example, guys. Let's have a look at the next one. All right, guys. So in this example, we're going to be looking at the dollar Swiss position from the previous lesson. And just a quick refresher. Again, we're going to be focusing on the entry, target, and stop loss in this case. And we'll go candle by candle. It's just so you guys can kind of see how that live entry played out. But again, just a quick refresher, because this is one of those examples that, it initially started off as a perfect CBO. So when you look at these intraday timeframes, you have a perfect kind of a channel breakout on a 4 hour time frame, and a break and retest of that channel and that 4 hour 50 EMA. And on the 1 hour time frame, the same thing. You have that long-term trend line, breakdown, retest of the 1 hour 50 EMA and the 4 hour 50, and then just crashed right after that. So this is again one of those examples where, you are waiting for a beautiful opportunity or just a typical trade, either an IBO or a CBO in this case, but there's a high impact news announcement, like a rate announcement. In this case, it was a rate announcement. And, those are very volatile, very risky, because you don't know which way it's going to go. It might go up, it might go down, or it might do nothing, But a lot of the times it can just literally go in any direction, and you got to be cautious of that. So I wasn't really executing it right on that 5 minute break, because as you guys see, as it rejected the 4 hour 50 and the 1 hour 50, that was that 5 minute break. That was exactly pretty much that rate announcement. So I wasn't comfortable enough executing at that point with a live entry because, 5 minutes later is the rate announcement and anything can happen, So this is where that phase line break strategy comes in. So I'm going to dig further into that, but quickly, let's just have a look at the daily chart. And as I mentioned earlier in the previous lesson, you guys should kind of understand this by now. The phase line break strategy is utilized in high volume periods, high momentum, high liquidity, pretty much when there's something crazy going on in the market, so typically the most common scenarios are going to be rate announcements and employment data releases. Those are kind of the most common ones. And I mentioned that, it has to be a shock to the market. Otherwise, it's not going to do anything. Otherwise, it's just going to do its normal thing, even if it's a rate announcement or employment data. I mentioned that I always wake up for NFP every single month, every single first Friday of every single month. I wake up for NFP, which is non-farm payroll in the United States. That's the employment data for the United States of America. And I want to see what's going on. I typically don't trade right before it because it affects all currency pairs, specifically the dollar, but all currency pairs. And it can do some crazy moves in the market. But I wake up every single time for it because I want to see what happens. But a lot of the times I don't take a phase line break for one reason, is that because expectations are met. So every single announcement, there's some kind of expectations. People make expectations that it's gonna do this number or release this number will be released. Approximate numbers. And if those approximate numbers are met, then typically not much is gonna happen in the market. Things just are going to maybe give a little spike to the upside, a little spike to the downside, and just continue sideways. But if the expectations are not met by a large number, then things are going to go crazy. Same thing if the expectations are met by a huge number, just like way over what was expected, then that's also going to react in a massive way. And that's what I want to focus on. I want to focus on those moves that are not indecisive, like when the expectations are met, but the moves that are crazy because they were not met or they were met by a huge amount. And that's what's really going to cause these big moves in the market. And that's what I like to focus on. Okay. So by looking at this daily time frame, the only thing for phase line breaks I really want to focus on is that obviously you want price action to be clean and you want everything to line up nicely. You don't want any messy junk. But the one thing I really like is that I like when the news drops and it causes a reversal in the market or a change in direction. Okay, in this case, we were in this bullish run, and then we started to decelerate, and then the news dropped and it caused a change in direction rather than a continuation, right? If it's a continuation, that's okay. There will still be phase line breaks. But if it's continuation like this and it's nothing crazy like a recession or anything like that, then it might be short-lived. It might just kind of go up and then go back down. So I prefer taking the positions that are kind of give us this change in direction. And that's just a personal preference because I noticed through experience they tend to work better. Okay. But there's one exception to that, and that's if we do have a recession or some kind of crazy economic event like that, that would cause the market to be overextended and continue to go up and up and up and up, or down and down and down and down, okay? Then in those cases, there's going to be many phase line breaks on the way down, okay? Specifically 1 hour phase line breaks, which we're going to have a look at the next example. But that's it. For now, when you're looking at typical news announcements, I just want to see a change in direction. That's exactly what we got here. So then, it brings us to the intraday charts. And it's nice when the intraday charts obviously already have good technicals. Like this intraday time frame already started off as a CBO. It's not always the case, but a lot of times it's going to start off as an IBO, as an ABO, advanced breakout, or a CBO, but sometimes not always, sometimes the move will cause a CBO. That's the thing. Like it might just be chilling up here and then the news announcement might cause a CBO breakdown, or an opportunity. But that's what I like to focus on. I want to make sure that the intraday charts are nice and clean as well. So it just really helps if prior to that, there's already some kind of strategy playing out. Doesn't have to be the case, but it's nice because that gives you already an edge, because the strategies have an edge to them. So this already gives you an edge. And a phase line break is really just an entry method, So you use your technical abilities, and the phase line break is an entry method. It can be utilized without a strategy, without a CBO or an IBO, but it can be utilized as a strategy by itself. But like I said, it's nice to have something else prior to that because it already gives you an edge, it already gives you that pattern, that trend change. Because the strategies that we trade, the IBO, the ABO, the CBO, they just give us trend confirmation, right? They're in different stages of that intraday trend confirmation. So it's nice when that's on our side. All right. So with that said, let's focus more on this entry, right? So as I was saying here, the 1 hour 50 and the 4 hour 50 were being rejected, and then the news announcement came in and price action started to explode to the downside. Okay. And it continued to go and go and go and go. What I'm going to do here is I'm actually going to jump right to that point. Okay. When the news announcement hit. And we'll take it from there. So you're also going to see how, when this 5-minute break happened, it happened so fast that it doesn't give you that value anymore. And I'll show you that in a second once this 4 hour time frame loads. But let me just fast forward a little bit on the 4H till the breakdown. And I'll show you what I mean by that. Because typically when that news announcement drops, it just causes a big move in the market. And when it happens, it's already not worth it. Okay. Let me just do the same thing on a 1 hour time frame. There it is. All right. So you see that when that 5-minute break occurred here, that's already way kind of below that 5-minute 50 EMA. Typically when I look for that 5-minute break, so this would be the CBO. This is a perfect CBO. It already looks like a perfect CBO. But typically you'd be looking for an entry like right there. This fell so fast that, the entry is already halfway towards the potential target. Imagine a typical CBO where you're targeting the recent lows, on the 4 hour or the 1 hour time frame. In this case, you could have pushed a little bit farther. But imagine if you were just targeting the recent lows. This entry would not be possible, because it's literally halfway from the rejection to your profit target area, so that's why like when the 5-minute break happens, I just want to enter on that break, not on a massive break like that. So that was the news announcement, right? You can already see the volume spiked massively to the upside. And from there, look at that, that's what happens, when these news announcement drops, you just get these big, massive spikes, and that's exactly what happened here. And then boom, another big, huge spike to the upside. And sometimes they're much larger than this. This is actually not a huge spike. A lot of times there's spikes that are way bigger. I've seen spikes go upwards of 100 pips, which is huge. And then at this point, I just want to see, so when these spikes are happening, obviously I'm not going to be entering the position anymore as a typical CBO. This is just crazy. The spreads are typically going nuts, and the volatility, the volume is just too crazy. It's still indecisive. We don't know whether this is going to go down or whether this is going to go up because of these spikes that we had. So I still need confirmation. So at this point, I'm already waiting to see what happens. The CBO is already missed. I have no idea whether there's going to be an phase line break or not. That's the thing with these phase line breaks. You really have to be present and in the moment to catch them, because you have to wait and see how that price action develops. And in this case, like I still have no idea whether there is going to be a phase line break or not, because I still do not have a clear direction. There's still indecision. Okay, so waiting. And now it's continuing to go down better. Okay, now we're getting a clear direction, as it's dropping here. Okay, and now we're pretty much good to go. We have a clear direction. It is a massive drop to the downside. Let's fast forward on the 1 hour chart. Right, there it is. So look at that volatility. right? And we're pretty much right here right now. That's crazy volatility. That's a big drop. And you saw there wasn't really an entry to catch that. But if you want to catch that, well, you need a strategy to do so, because the other strategies will not catch this move. And then let's continue and see what happens. And here's the initial pullback that happens. And you're going to typically notice that initial pullback, like I've been saying, within a couple hours, after that news announcement. So this was pretty much within an hour or so. And it continues to go up. And here you can already start to draw in your phase line because, there might be a phase line entry here. So you can already start to draw it in and see what happens. But in this case, there was still a news announcement. Typically, after a rate announcement, what happens is that a little bit after the rate announcement, there's a meeting that's being the speech in regards to the rate announcement, and the speech can be really volatile as well. So write this down, when it comes to the rate announcement, you're typically going to have the rate release, which is going to cause potentially a big move in the market if something significant happens. And right after that rate release, you will have the speech in regards to that rate, by the official of that central bank. And the speech, they're probably pretty much going to tell you what's going to happen next, with their economy, with that currency. And those speeches can be pretty volatile as well. And you will see that, boom, here's where that speech happened. And the phase line break couldn't have been executed again. So there was no really entry here because this broke way too low. Okay. And now I'm waiting for more. So you can see it's already starting to accelerate again to the downside. And here is the second pullback. And this is see how nicely this is pulling back? This is like a proper pullback. At this point, you're already drawing your phase line in, and you're just waiting for that retracement to go a little bit higher. And you're waiting. And here is already starting to break down. So at this point, you can already kind of figure out your potential position size. So let me trash this. And already this break is not good enough yet, because you can see that it's not really fully breaking down. I kind of want a clear break, but at this point you can already start planning your entry. So stop placement, because this is the trickiest part when it comes to the phase line break, is the actual stop placement itself. Because if you go too wide, it's not going to be worth it, because you got to remember that this is a lot of pips. This is already 78 pips. That's some of the largest stop placements I ever have. Typically a stop placement will be 40 pips, 30 pips, maybe 50 pips, sometimes 70 and 80, but this is already a large stop placement. So when you're thinking about scalping, this is not a scalping strategy. A scalping strategy, you're going to have a 5 pip, 10 pip stop loss. In this case, putting it above 0.618, well, that would be a 80 pip stop loss. That's huge. That's not a scalping strategy, because you got to understand that this was a humongous movement in comparison to what typically happens, So what I'm saying is that a lot of times with these phase line breaks, you do not need to put your stop loss above 0.618 Fibonacci. Okay. You can, but because of how big the movement is, that will typically be a massive stop loss, and it's unnecessary typically, and that will greatly limit your reward to risk ratio as well. So what I typically do is, I like to put my stop loss above 0.50 EMA, above the 5-minute 50 EMA. But in this case, you can also see that it fell so hard that 5-minute 50 EMA still didn't catch up to the price action. So what I typically do is I put my stop loss around 0.5 fib. Okay, so in this case, it would be 50 pips. Above 0.5 Fibonacci, and that's still a decent number. 50 pips is a great stop loss. It's a very good stop loss. In this case, it seems like it's not protected, but you gotta understand that the difference between this strategy and the other strategies is that we have massive volatility in the market. So what you gotta understand that this has already been falling. The market has already proved that this is a bearish reaction to that news announcement, and a huge bearish reaction to that news announcement. There's zero deceleration on this 1 hour time frame. Chances are this is just going to continue. Okay. And I've backtested this so much that what typically happens after a couple hours, there might be like a small 1 or 2 hour pullback, and then it just continues, because people are taking their profits, and then a continuation happens, So this is what's happening here. People are taking their profits, and then, or stops are being hit, either one of those. And then once the phase line breaks, the move continues. And this happens over and over and over and over again during these market conditions. So the expectation is that once that phase line break occurs, they're just going to continue going down and not continue going up. So you just want to make sure it's a good phase line and a good phase line break, and when that happens, it should just continue going down and not continue to go up. Okay, so that's the expectation, because I believe that once that phase line break happens, and I've seen it many times, so I'm confident in it, but once this phase line break happens, I'm confident that I will continue going up, so that I am also confident with a tighter stop loss, not protected by 0.618, but protected by 0.5, right? Or sometimes by maybe a different level, like a horizontal line or something like that. So in this case, check this out. It broke the phase line, but it's moving sideways. The volatility is still not really kicking into the downside. So I'm still not in the position, okay? And it's still moving sideways. I want a clear direction. I want to make sure that once it breaks the phase line, it goes down, so I want some bearish pressure, and still nothing, That's okay. It's good that it's not going up, because it means that there's something there, And here we go. So at this point, we're starting to go down. We had this bearish candlestick, and this is my entry. You can see the volume even started to spike to the upside. And at this point, that is my entry. And this is where I go short. And now target, so we got our stop loss, 50 pips above 0.5, and now it's all about the target. So where do you push it? So there's a few things that you can do. You can sometimes target the previous lows on a 5-minute time frame, and that would be a 1-to-1 trade, a quick 1-to-1. You can do that. It happens, Or what you can do is you can let it go even farther, maybe down to the weekly daily 50 EMA, 99.7 or 99.6. 99.6 would be, down here. So you can take it down to that daily 50 at 99.6, and that would give you a 2.7% position. Pretty good, right? Or you can let it go as far as possible and utilize the aggressive, short-term aggressive management strategy that I will teach you in the management lessons. There's 3 management strategies. One is short-term, one is short-term aggressive, and one is long-term. Okay. And for this, because this is kind of an aggressive move, I would be utilizing a short-term aggressive management strategy, which I'll explain it here briefly. But let's just kind of fast forward, so the entry happened and price would continue to drop. So if I'm utilizing a short-term aggressive strategy, then I'm letting it run as far as possible, letting that momentum, letting that volume just do its thing. Sometimes it will pause, but I'm going to be keeping an eye out on it to make sure that, it's not reversing, but the plan is I'm going to let it ride as far as possible, so let's see what happens here. And the 5-minute chart is just dropping. And we have some small pullbacks here and there. You can already see that there are some small little pullbacks, there's small little phase lines. Typically when it's a really significant opportunity because of the news announcement, there's going to be multiple phase line breaks. It's not that you want to take them all, you want to take the initial ones, but there's going to be typically many phase line breaks. And it's still going down, still accelerating, and now it's starting another pullback. You can see that at this point, one thing's happening, and that's volume. So you also want to keep an eye out on that volume indicator, because when the volume drops, then typically it's just going to start consolidating. Maybe a pullback will come in the market, because the end of the day is coming. In this case already, it's been going for a few hours. Let's fast forward on this 1 hour time frame. Look at that acceleration. And here was this is where the entry actually occurred, so it was after that massive drop. So we already missed out quite a bit because, like I said, initially we want to kind of enter up here, on that initial phase line break, but that was another news announcement. And instead we entered on the second phase line break, which was kind of significantly lower. If we entered on that first one, we already would have been sitting at a pretty decent percentage, but that just wasn't the case. And then it just continues to drop and drop and drop. So the idea is, with the short-term aggressive management strategy, okay, I'm exiting when I believe a pullback is going to happen. So I'm simply going to exit when I believe a pullback is going to happen in the market. In this case, not yet. We're still kind of going down on this 1 hour time frame, going down, but you see we're slowly decelerating, but not yet. We're still accelerating. Look at that, So no pullback yet until a bullish candle closes. And now, now we have a bullish candle, right? So all of a sudden we were accelerating to the downside and then accelerating. Then we had a strong push here. Let's fast forward on that 5-minute time frame to catch up to where that 1 hour chart is, and then we'll fast forward on the 4 hour chart. Right, so you can see already the volume is dying. The day is coming to an end. Here's that last push that we had, right? And it's still going until pretty much now. And this is where that hour came to an end. Okay, so let's fast forward on that 4 hour chart as well. So look at that huge move, So initially, like I was saying, this was right here was the initial phase line break. This was the first phase line break entry. Actually, no, the first phase line break happened earlier. Right there, So this was that first phase line break entry. This is where you would want to enter. But again, it wasn't a possibility in this case because that was another news announcement that caused this big move to the downside, and then it continued. So now here's pretty much where we entered. We started to enter over here. Okay, so that was already a big drop, and because of that, we lost a little bit of percentage, but we still made a lot, because of the volatility that it had. And then it continued to drop on that 4 hour time frame. Let's just catch up. Right, it's still dropping. Still accelerating. That's a huge move. It's not always that it's going to be this big, but when it happens, it's typically good. And right now, we're already coming to an end on that 4 hour time frame. So this is pretty much where we're sitting at right now. So check this out. So my idea at this point we're sitting at the lows, we were sitting at 220 pips. So that was 4%, just above 4% at the lows, right? So that's a huge move for a phase line break, and I exited the position right here, so this is where I exited. And here's why. Right, so I exited for 180 pips, and that was 3.6%, so that was my exit, 3.6%, pretty good. And the reason why I exited here, this is the exact moment I exited, and that was because I believed a pullback is happening in the market. So the 4 hour chart is potentially developing a low test reversal. The 1 hour chart has its first main bullish candle. And you can see the volume has already come to an end. It's already the end of the day coming in, right? That day finishes at 22 GMT and we're already at 21, right? So at this point, I'm like, okay, I'm going to take my profit now. Why? Because we have a 4 hour low test that's developing. The first 1 hour bullish candle came in, low volume in the market. The day is coming to an end. So now we're going to continue with the Asian session, and the volume's typically going to stay low. So we're probably going to witness a 1 hour pullback, right? So I'm like, okay, there's going to be a 1 hour pullback, time for me to take my profit. And this is where I exited the position for, again, 3.6%. Pretty good, right? So phase line breaks, that's kind of it, So you now saw two examples of phase line breaks. They're both kind of started off the same where, it was initially I was looking to enter a position, but, high impact news announcement. So I don't want to really enter around that announcement. I want to wait and see what happens after, and sometimes the news announcement is not going to be significant and it's just going to offer a typical entry, and that's great. But sometimes it's going to be very significant and it's going to cause these massive moves in the market, right? And that's when you're going to utilize the phase line break instead. So in this case, again, that was the exit. So you guys already saw how to execute a 5-minute phase line break, which again happens a few hours after, a couple hours within that news announcement and dropping. Now the next example that we're going to look at is the 1 hour phase line break, which typically happens the day after a high impact news announcement like this, So with that said, that's kind of it for this. You get a little bit of a taste of how to utilize one of the management techniques, which is the short-term aggressive, because you don't want to hold a pullback. That's when you utilize that short-term aggressive management strategy, is because you don't want to hold a pullback. And this is just kind of one example of it. It's not even a perfect example of that strategy playing out. This was me utilizing that idea of that strategy, but more of a discretionary kind of approach, because I don't want to hold a pullback. The day is coming to an end, and I believe that a pullback might be coming. So simply taking my profit and moving on, And again, this was good profit. It was 3.6%. That's a great move. So I didn't need anything else. In the previous example, you guys saw how to utilize a profit target, because you can utilize profit targets in these kind of examples as well. And that was a simple one where, it's just easy to utilize a profit target. This one, it was kind of better to just let it ride. In the next example, again, we're going to be looking at the 1 hour phase line break. So that's it for now. Let's have a look at the next example. All right, guys. So in this example, I'm going to be looking at the dollar CAD position that we looked at in the previous lesson. This is the 1 hour phase line. So the two previous examples, we looked at 5-minute phase line entries. So in this example, we're going to be focusing on the 1 hour phase line entry. It's the same, but a little bit different, right? So the 1 hour phase line entry the difference is that it happens the following day, whereas the 5-minute phase line entry typically happens within a couple hours of the news announcement dropping, within the volatility increasing, right? So this is, let's say, the volatility increase. In this case, on Friday, it was the NFP announcement that caused the drop, right? That you guys see here on the chart. So that was the NFP announcement that happened on Friday. Then volume kind of died down at the end of the day. And again, it was low at the beginning of Monday. And then the pullback happened, So this is the 1 hour phase line that happened the following day. So typically a 1 hour phase line happens the following day, maybe 2 days after even, And so that's what we're going to be focusing on in this example. And we're going to be looking at the entry, stop loss, and the target for the 1 hour phase line entry. But mainly focusing on that entry, because the entry is a little bit different. And this one's tricky when it comes to the entry, because you need to know that you need to figure out if the volatility is still there, whereas with a 5-minute entry, it's pretty clear, because it's just been dropping last hour kind of thing, where it's been quiet for, a day maybe, or half a day due to the pullback. So we need to know that when we're entering the position, that the volatility is still there. So that's what we're going to be focusing on. And with that said, let's kind of review this example again. So starting on the higher time frames, just so you guys kind of get a hang of the analysis. The overall analysis, obviously you want to have a bias. You want to make sure that, at least I like to make sure that when the phase line break happens, it's kind of the same structure as an IBO or a CBO or an ABO, meaning that it's the beginning of a run or a beginning of a pullback, rather than a continuation. Because when it's a beginning, you have more room to move than if it's a continuation, So that's kind of what I like to focus on. Obviously, you can take them as continuation plays as well, if the momentum kind of increases, and they do work. I've backtested that and it does work. However, again, I just like to enter at the beginning of a run or a pullback. That's just my thing. And I found that the strike rate and the results are better doing that as well. Now, I mentioned it previously, the only exception to that would be, again, if we're kind of like in a recession, or if, something was happening in the economy, in the global economy, that, the market was just extended. It was just either exploding to the upside for an extended period of time or dropping to the downside for an extended period of time. Typically a news announcement, maybe it's going to last for a day or maybe a week max, the results of a news announcement. But sometimes things happen that last a little bit longer than that, but specifically a recession, that's the thing. Or in other countries, you might see a different economic situations kind of develop that also have a similar kind of effect that a global recession would have, but maybe it's just in that economy. Check out Turkish lira, the movement on that as an example. All right, so with that said, that's just an example of a continuation of that run, when you can potentially use a phase line entry on a continuation. But I like to, for just the general, I like to focus on what's going to happen the most often, and that is reversal, a change in direction. So that's what I like to focus on, because that's going to happen the most often rather than these extended economic events. So with that said, when we look at the higher time frames here and focus on the daily time frame for now, actually focus on the weekly chart, because on the weekly time frame, the first thing you can see right away is that we have a break and retest of the weekly 50 EMA, right? So I've been watching this setup for quite some time, and it's pretty simple. Just a breakdown, pullback, retest of the weekly 50, deceleration, right? So you can see at the same time as the weekly chart is hitting that weekly 50 EMA, the daily chart is also kind of stalling, but it's a little bit above that daily 50. But what is this daily chart doing? I would say that this daily chart, it kind of goes like this when it comes to the trend and the Elliott wave theory. Wave 1 breakdown, wave 2 pullback, retest, right? Wave 3 run, wave 4 A, B, C pullback, and this is a wave 5 continuation, So this is what I was trying to trade. I was trying to trade that wave 5 continuation, right? And play that weekly momentum down to the lows. So that's how I saw it, and simply when we zoom in even farther, obviously you can draw a little phase line here on the daily time frame, right? And then on Friday, when the NFP dropped, the news announcement dropped, that was this day right here. So that gave us the breakdown. So that on Monday was a perfect trade. On Monday, we had a beautiful rejection of the weekly 50 EMA, and the daily chart has broken down, continuing that wave 5. Or starting the wave 5 run, okay, the last run of that trend. Now the thing with wave 5 runs is obviously they can go to the lows, they can go maybe a little bit farther, but they can also potentially form a higher low, right, and turn around. So my target, well, obviously I'm going to target the lows because there's really nothing else prior to that, So yeah, there's not much prior to that, so my target would be the lows. But my management strategy needs to be in a way that, if it doesn't reach there and it looks like it might be forming a higher low, I can exit, right? So that's kind of what I was thinking. Yeah, it's a beautiful higher time frames. The only issue was the monthly chart, monthly 20 EMA, but do you have confirmation of a bullish rejection anywhere? You don't. The weekly chart is not bullish. The daily chart is not bullish. It doesn't have any bullish bias at this point. So the monthly 20 EMA rejection doesn't mean anything at this point, until we have some bullish bias, which might come soon, but at this point we do not, right? So, like I said, my preferred target was the daily lows, right? But again, with the management option of exiting early if I have to, if I believe that, it might be forming a higher low or a deeper pullback might be coming or something, So I always want to have that option of an early exit. So that's the plan. Okay, so that's the momentum. The momentum again came right there. It wasn't even the biggest momentum, but that's where it was. NFP happened this day, and then the trade happened this day right here. So now it brings us to the intraday chart. So the daily chart already gives us that reversal, the change in direction. Perfect. We have room to move. great. That means we can push it a little bit farther and not just target like a quick trade, and specifically because of the weekly, that means that we can also push it farther and not just go for a quick option. So it's nice when you can push it farther, but it's not always the case. So that brings us to the lower time frames, and again, you look at the 4-hour chart, and does the 4-hour chart confirm the bias? Yeah, it does, got a perfect breakdown. Great. The 1-hour chart is the same thing. You zoom out on the 1-hour time frame, and you notice that we have this trend line that we were riding, and then we finally broke it to the downside and starting this new bearish trend, right? So what else does this look like? This looks like a CBO option, right? Break and retest of the 1-hour and 4-hour 50 EMA, 0.32 fib, trend line, after daily rejection, after weekly rejection as well. So this is like a perfect CBO. But it wasn't taken as a CBO, it was taken as a phase line entry, okay, a phase line break. But what I was saying, and I think I mentioned this in the previous example or in the previous lesson when I was talking about this example, is that it's nice when you start stacking confluence factors together. That just makes a trade better, because obviously we're stacking confluence factors on those higher time frames, right? But when you look at the lower time frames where that is also a CBO type of pattern, break and retest of the 4-hour, 1-hour 50 EMAs, right? That's a CBO. And what is a CBO? A CBO means that we have a complete breakout. And when you have a complete breakout, then that's some of the best patterns that you can get. It's confirmed, it's fully confirmed. There's not much against you when you have a complete breakout, right? You're fully in a bearish trend in this case. So that's how you stack confluence factors together. You just keep on adding and adding and adding, using multi-time frame analysis to confirm one another, and at the end of the day, you have this beautiful opportunity. So now comes the entry. Why phase line break over CBO? Okay. So I need to explain that for you guys. Why a phase line break and not wait for a pullback to the 1-hour 50 EMA 0.32 and the trend line here, right? It's a big question. And it's not that it's complicated to answer. It's not a complicated question to answer. It's just the volatility. That's all it really depends on, the volatility. So obviously we know that the volatility here increased during NFP, right? Which was this drop, as you guys can see on the 5-minute, 1-hour, 4-hour candles, right? This massive drop. That was a 200 pip drop to the downside. Let me just confirm. Yeah, 190 pips. So nearly 200 pip drop to the downside during 1 hour. That's huge. That's a big drop. So obviously that was that volatility increase, right? So now we need to figure out whether this volatility is going to continue or whether we should wait for the CBO. So what I'm gonna do here is I'm actually gonna jump right back to that entry point right now, and go kind of candle by candle with you guys. So let's do that. On the 4-hour chart, I'm not gonna jump 5 minutes at a time because that will take us forever. I'll just jump 1 hour at a time on that 4-hour time frame. Speed it up a little bit. There we go. That should take us to the entry point. On a 1 hour time frame, I'll do the same thing, but I'll jump 15 minutes let's do 30 minutes at a time just to speed it up. And on the 5-minute chart, we'll do 5 minutes at a time. There we go. And then lastly, 5 minutes. And there we go. All right. So how do we plan this? How do we figure out which option to take? And the thing is, at the beginning of the day, this makes your watch list as a CBO, with a potential phase line entry because of the high volatility from the previous day. But it starts off as a CBO, right? The pattern is a CBO. It's a CBO type of pattern strategy, right? So that's what we're waiting for. So initially, we're kind of waiting for a balance of the 0.382 and the 1-hour 50 and the trend line. But knowing that obviously, there's volatility from the previous day, so it may not reach that area. That's the thing. When there's so much momentum, when there's so much volatility, this is actually what I found. And I don't know if I covered this earlier. I think I did. But let me quickly cover it again. When I started developing the strategy, right, and I'm pretty sure I talked about this in the introduction of the previous lesson. When I was developing the phase line break strategy, I developed it for one reason, and this is exactly it. It's literally this. This is the example, that made me develop the strategy. It's not this exact example, but it's the same pattern, 1 hour phase line break. Because what happened during that week when I was developing the phase line break strategy in 2015, what happened was that I had beautiful opportunities on watch. It was exactly this, so imagine multiple opportunities like this that went on to make 300 pips or more, and I was not able to enter any one of them. I missed out on a ton of percentage, and I was not able to enter any one of them, right? They all look like this. Beautiful opportunities, beautiful CBOs, and I was not able to get into any one of them. Why? So I started questioning, I started digging into it, and I found that every single one of them had one similarity, and that was every single one of them had high volume the previous day, and then phase line entries the following day on a 1 hour chart. Every single one of them, okay? And it was just a unique period in the market because of that. And that's what I found out, and then I started backtesting it over the weekend, and then the results came in. I started looking at years and years and years worth of past data, looking at these high volume opportunities and seeing what happened. And every single one of them, or a big majority, not every single one, but a big majority, had this type of pattern, where it just never pulled back all the way, 2.3 to Fibonacci, or all the way to the 1 hour 50. Why? Okay. So what I came to the conclusion is that the reason why it doesn't pull back is just it dropped 200 pips in a day, so you got to remember it dropped 200 pips in a day. So it's kind of extended on the 1 hour time frame, right? So in order for it to pull back to the 1 hour 50 EMA, it's got to pull back quite a bit. Same thing, imagine here, if it has to pull back to the 4 hour 50, it's got to erase all those bearish gains, in order for it to pull back to the 4 hour 50. So it would have to pull back a lot. And that's the thing. If it drops a lot in a day, it means that it also needs to pull back quite a bit. And the question is there enough volatility to actually pull back all the way to the 1 hour 50, right? Because obviously there's a lot of bearish pressure. So is there enough bullish pressure to push the price back up to 0.382 in the 1 hour 50? And typically the answer is no. But you can't be sure until it happens, That's the thing. So how can we be sure that there's not enough? That's the thing. You have to be ready for both options, when it comes to these phase line breaks, these 1 hour phase line breaks, because the 5-minute ones, they're easy, because it literally just happens right after the volatility, as the volatility is still there, as the volume is still high, But at this point, the volume already dropped, and now we're kind of taking it on the volume increase again. So how do we know that we should be taking a phase line break and not waiting for the CBO? Okay, so you have to be aware of both. You need to be aware that, okay, there was a volume increase the previous day and the market dropped quite a bit, and there might be a chance that it might not pull back all the way to the 1 hour 50 EMA and 0.382, okay, because of too much bearish pressure. But we can't be 100% sure until it happens. So what do we need to look for? We need to look for a volume increase, okay, on a 5-minute chart. That's why I have this volume chart here. I use it for the ABOs and phase line breaks, okay? And so you want to be waiting for this volume increase, and you can see here already the volume is increasing. And which way will it go? Okay, so right now it's still holding that 1 hour 50 EMA, right? So which way will it go? So let me kind of talk about the phase line first, right? So because you got to be, at this point, you need to be prepared for either option, because when the volume increases, it might just pop to the upside, reject the 1 hour 50 EMA and then drop, right? Or the volume is going to increase and it's going to break and continue lower. Those are the two options, right? Volume is going to increase and it's either going to continue going up, or volume is going to increase and boom, we're going to get a break to the downside and it's going to continue lower. So we need to be ready for that break to the downside. So this is where you already start drawing in your phase line. The pullback's happening, And if you can draw your phase line, then you draw your phase line on that pullback. And what I like to do is when it's a 1 hour phase line, I like to take that phase line and toss it on a 5-minute chart. And on a 5-minute time frame, it becomes like this trend line, right? So run on a higher time frame is a trend on a lower time frame, right? So run on a day 1 hour or pullback on a 1 hour will be a trend on a 5-minute, right? Same idea. So it becomes this trend line on a 5-minute chart. The price is riding. And over here, you can already see that it was trying to break, but it didn't break it. It didn't break that 5-minute 50, didn't break that trend line or the phase line yet. And now it's kind of starting to potentially break that phase line as the volume is increasing, right? So you need to be ready. You need to put your phase line in on a 5-minute chart. It's just like it is on the 1 hour time frame. The reason why I have it on a 5-minute chart and not the 1 hour chart, well, I have it on both, but the reason why I wouldn't be waiting on a 1 hour phase line break is because you might miss that opportunity. If you're waiting for a 1 hour candle to close below the phase line, you're going to be entering at not a very good price, not the most ideal price. Okay, but it's going to give you more confirmation. Obviously, that's the benefit. It will give you more confirmation. It's just it might not be the most ideal price because it might just break down and the 1 hour candle might close down here and then you can't enter because that's too low. So what I use is I use that 5-minute phase line. I take that 1 hour phase line, put it on a 5-minute chart, it becomes a trend line, and then I wait for both. I wait for the trend line break and the 5-minute 50 EMA break. So it kind of becomes like a live entry, And when the volume increases and I get a break to the downside, then that is already breaking that phase line, right? As long as it breaks the trend line on a 5-minute chart, then it's already starting to break that phase line. The negative is that it might just be a false break and might just continue going up. That's the negative, right? But the positive is you're getting in at a much better price. So at the end of it all, as long as your strike rate, not your strike rate, but as long as your reward to risk ratio is high on these phase line breaks, and this was a 4% position, so it's high. But as long as your reward risk ratio is over 2%, then you have room to be wrong. The thing is, typically, if you're playing the momentum, it's typically going to work out in your favor, but once in a while, obviously, there's going to be losses. But I found that this strike rate on this setup is pretty high if you're picky and selective and you make sure that, you're focusing on the high volume setups. All right, so let me fast forward because I've been talking for a lot. So again, you're waiting for that volume increase, right? Otherwise, this might just continue going up. So we have the phase line, we're waiting, we're going 5 minutes at a time. At this point, we're ready. We're already prepared our entry. We know what our position sizing is going to be. We have that ready. We have that figured out. So position size, we're going to enter somewhere here. As long as it breaks down, this is kind of where the entry is going to be. Stop loss. Stop loss is, again, let me talk about the stop loss because that's tricky, right? So somewhere above around 0.5 Fibonacci. The problem is going to be that if it gives you a fake out and breaks that phase line, 5-minute 50 EMA on volume increase, and you enter the position and it's a fake out and it pulls back, you might get stopped out. That's the negative. But going with a wide stop loss, it's not going to give you the best return, because if you want a traditional stop loss at 0.618 Fibonacci, then then you might as well just wait for a thingy, a live entry, a CBO. Because, well, at that point, that would be 100 pip stop loss, and our return is 2.5, which is still good, but it's obviously not as good as 4.2. But you can do both. You just don't choke your position too much, I mentioned that I typically go like 0.5 fib stop loss somewhere around 0.5 fib. And we looked at it on a 5-minute chart. Well, this is now a 1 hour pullback, so 0.5 fib on a 1 hour time frame, because again, when the volume kicks off, I'm expecting this to continue lower, not to pull back, So I want to be protected just so in case it does a high test, I don't get knocked off for no reason, But so that's why I still put it above 0.5. But I don't want to choke it too much either, and I don't want to put it too high either because it's a momentum play. And once the momentum continues, I'm expecting it to go down, right? And not be indecisive. However, you can obviously choose a safer stop loss and put it above 0.618 if you want. But again, your reward risk ratio will dramatically decrease by 2% in this case by doing that, you know? So I prefer to just have a little bit of a higher reward risk ratio, but still keep my stop loss fairly protected, you know? And not choking it like literally like right above. That's what some people do. That's too much. All right, now let's finish off this lesson. And what are we gonna get here now? Let's see, 5-minute chart, fast forward. Boom. See, volume spiked up and all of a sudden we got that strong 5-minute break to the downside, right? And boom, at this point, that's our entry. 1 hour chart, what does that look like? Boom, you know, break to the downside, that's the entry, you know, and then on a 4 hour chart, boom, there it is, that's that entry, you know. So volume kicked in and this is what it looks like at the time of entry. Beautiful, you know, so spike, massive breakdown, a big kind of push, a clear breakdown, not like a weak breakdown, but this is like a clear breakdown. So at this point, okay, it's probably not going to go up. I'm already ready for that phase line entry. You know, at this point when the volume kicked on and we had the break to the downside, at this point I can be pretty sure that we're probably going to continue lower and not go higher, right? So the volume is, again, as the volume increase, it's continuing the momentum from the previous day. That's the idea. In this case, it continued to drop. Just a little bit of indecision there. And eventually it should start falling. There we go. Let me zoom out. Boom. You know, and New York session opened up and there was another push to the downside here. And then it continues. Right, so I mentioned that my management strategy is going to be exit either at the daily lows, right? That's where kind of the profit target would be set, or exit if I believe that a pullback's coming, you know? So in this case, I'm utilizing my short-term aggressive management strategy that I'm going to teach shortly in the next couple lessons here. Because I have three. I have a long-term management strategy. I have a short-term management strategy, which is simple, and I have a short-term aggressive management strategy, okay? And you guys will know all the differences. You can utilize every single one of them, but you'll know the differences soon. All right, you can see here that now the volume has already died down, right? We had that spike here at the start of the New York session, right? So the volume picked up in London. That's when we broke down. We never pulled back, you know, never pulled back at all. Just continued lower. And now the volume kind of died down and you can see it's again slow and slow and slow until the volume picks up again, you know. So that's going to take us to the new day. And the volume is already kind of increasing mid-Asian session into the London session, right? The volume is already high. And we're at the New York session right now. The volume is at its highest point. This is a dollar CAD position, right? So dollar and Canadian dollar, they're both North American pairs, so their volume is typically the highest during the New York session, right? But it always kind of starts off during London. And here we go, almost at target. Well, not at target, almost at the entry at where I exited, right? So we're almost at that exit. And I'll show you exactly why I exited, when I exited, okay? And we're still heading lower. So we never even had a pullback since then, you know? Never even pulled back. And we're gonna have a look at that on the 1 hour chart, but that's the thing, no pullback at all. Right, the momentum plays. And here we go. This is not the target. Again, I was targeting that daily low, right? It's just the position size is set for when I exited, but I'm targeting down here, right? So I was targeting the daily low would have been, hold on, let me fix that. So the daily low target would have been 25.5. And if I set this to 25.5, my overall target would have been almost 7%, So that's what I would have been targeting, 7%. But let's just go back because I have it set to the exact moment where I exited. Right, so it accelerated to the downside and soon volume spikes up. Again, you can see now it's already been dropping for quite a bit. It's been dropping for over almost 300 pips, right? It's a pretty big drop. And now volume increase and it looks like it's breaking back to the upside, okay? Let me show you that on a 1 hour chart. So you see, volume increase, price dropped. And look at that 1 hour chart, just kind of increasing, dropping to the downside, right? And barely ever had a pullback since then. Small little kind of low volume periods. This is again end of the day, beginning of the Asian session. Volume kicks off again and starts dropping there in London. And it just continues. And at this point, I kind of drew the trend line, right? Why did I have the trend line? Well, for my exit, okay? Because this is the short-term aggressive strategy. I need to know when it's breaking out and why it's breaking out, okay? And this is exactly where I exited, right there. And I'll speak about that in a second. Let me just move up on that 4 hour chart. All right, we're dropping. And this is where I exited. Okay. So let's talk about that. So short-term aggressive strategy, we're going to talk much more about it shortly in the coming up lessons. But the idea here is now the 4 hour chart is overextended. The 1 hour chart definitely needs a pullback. We have bullish MACD. It's riding this phase line. You can't really draw a triangle, but sometimes you're going to be able to draw a triangle pattern, but there's really no triangle pattern here. But does it require a pullback? Yes or no? And if yes, then how far can this pullback go? Well, probably, imagine like a deep retracement on a 4 hour chart. You can probably pull back all the way up here. And if it pulls back all the way over there, how much profit will I lose? Well, look at on the 5 minute time frame. That would be about half of the position right now. So I'll be sitting at about 2%. And what if at that point it gives a breakout, retest of the 1 hour 50 and continues going up? Well, then I might lose it all. Right? So I don't like holding big pullbacks, right? So in this case, when it's this overextended, I typically utilize a short-term aggressive strategy, meaning that when it's this overextended, I'm already running at a good profit and I believe that a potential pullback might be coming in right now, then I'll just take my profit. I don't have FOMO, so I'll rather just take my profit and move on. If it continues lower to bank 7%, great, I was right in my analysis, but I still prefer to take my profit. So in this case, you can see that this is the first kind of 4 hour bullish candle that we had, a proper 4 hour bullish candle, right, since the drop. And the 1 hour charts broke this phase line to the upside. And at that point, the 5 minute chart, you can see the volume increased massively, right? And had a clear break above that 5 minute 50 EMA. This is like the first time it broke above the 5 minute 50 on a proper volume increase. And I took my profit for 4.27%. So that is it. This is a phase line strategy played out in real time. Now you guys have already a few examples of them, right? I explained everything you guys need to know here, right? But this is not a strategy that you're going to be utilizing all the time. It's a strategy that you might be utilizing once in a while, but definitely it's not going to be something that you're going to be utilizing all the time. I don't trade this strategy monthly, because in a month we only have a few high impact announcements, and it's not always that I'm there on the charts when it happens and such, so I don't trade the strategy monthly, once in a while. But I like to have it, and I have fine-tuned it, and I have seen many examples of it, so that I'm confident, so that when I have to execute it, I can, and if there's ever a recession that comes in, I want to be prepared on how to execute, because chances are an IBO or a CBO might not offer those entries during a high volatility period like a global recession or any other kind of economic breakdown or collapse in any other country, because we're not going to have those deep pullbacks potentially, so it's good to have a strategy like this somewhere stashed for you to whip out when, those volume increases happen those volatility times in the market happen. But just know it's not going to be all the time. So this is a strategy that, keep at the back of your pocket for those one-off moments. Okay. And that's kind of it. So this wraps up the strategies. At this point, 5 strategies, the IBO and the CBO, which are simple strategies, very powerful. The CBO strategy being the most powerful out of them all because it gives you the complete breakout, right? But the IBO and the CBO, they are going to be your most common strategies. They happen all the time, over and over and over again. And with those strategies, your only job is going to be filtering, making sure you take the best opportunities. Because you cannot take every single IBO, you cannot take every single CBO. You have to still use your technical analysis skills to pick the best one from the day, based on multi-time frame analysis and everything. The higher time frames, the daily chart, how clean are the intradays. You still have to utilize a little bit of discretion to pick the best ones. Then you'll know what I mean. You're going to have shitty looking CBOs and you're going to have beautiful looking CBOs, and you just take the beautiful ones instead of the shitty ones that day, And then the advanced breakout. The advanced breakout is another powerful strategy, and that's going to be your third most common strategy, and those 3, I find that for myself at least, those 3 are the most common strategies. That's what I trade monthly. Every single month, I typically take an advanced breakout and an IBO and a CBO. Typically have all those strategies, utilize them every single month, And then after that is the advanced continuation breakout. And that's once in a while, That's something once in a while as well. And then a phase line break also once in a while. So every single one of those strategies has a different purpose, which is great. I wanted to build it that way so that every single strategy is very similar, has the same kind of principles behind them, but catches a different part of the market. And every single one of these strategies catches a different part of that intraday trend or that higher time frame run. Every single strategy catches the beginning, but in a different way, at different points in time. So that if maybe an IBO is not there, you can take a CBO, and that's the purpose of it. So now you guys know them all, study them, go over them over and over and over again, make a lot of notes, everything you guys need to know I shared here in these lessons. So make sure to keep on watching and take a lot of notes and watch them again and again and again, and I would recommend, now we're going to be digging into kind of, after this, we're going to be combining everything together into a few lessons and talking more about management and such. So I recommend you go over everything and then watch the masterclass as many times as you have to. The more times you're going to watch it, the more information is going to absorb. All right. So that's it for now, guys. Hope you guys enjoyed this phase line break strategy and all the other strategies, and I'll see you in the next lesson.